Hello again. That's today's Tuesday, the April 12th, and we are back here to talk about the Forex market, the currencies market. I would like to remind you that those presentations are made to give you a taste of what it's possible to do with technical analysis, and it's not a recommendation to buy, sell, or invest in futures, stocks, options. You need to have a very good knowledge before you place an order. You can find in the market several of the most brilliant people, of the most well-educated people, very good professionals. So it's a losing proposition to approach the market on a amateur way, without really being prepared, without really having a plan, really knowing what to do to be profitable. So the idea with those presentations is to show you one of the approaches that exists to invest, and that's my personal preferred approach, and it's about technical analysis. Technical analysis focus on price charts to understand the movements and the price movements, and to create strategies that have an edge over the market. And we need to really test a strategy to make sure that statistically we have an advantage on the market, and we can make money by trading or by using that strategy to invest and with a shorter or longer term perspective. So we have here the Euro-US chart, and people that has been following me know that I mentioned how important was that resistance level here. We traded above that resistance level last week and proceeded higher. We are approaching another resistance level today. We should be getting closer in the next few days, and then we should see some retracement or some sideways action on the Euro-US pair. However, the trend up it's quite strong, and I would like to show you one of the techniques available to project future prices and to see how far you can extend a trade. So we can use, for example, that technique I'm going to show you. It's called Fibonacci pivot projection, and we use that to evaluate how far the market can go by comparison to the former, to the previous action. So we traded and closed above the 100% level. So my expectation, and that happens on a very large number of cases, it's not 100% sure, but statistically is significant, that when this happens we might go after the next projection, which will be about 1.5. That's very high, and we might see this after some ups and downs in the euro. So I would like to put a horizontal line at this level here. Let me change this color, and we are going to follow up in the future to see if we really reach that level in the future, or if the market is going to change its behavior and trace down. Let's take a look now on the US dollar, Canadian dollar. We have been talking about the US dollar, Canadian dollar for quite some time now. We reached this line here, which is a downward trend line, and I remember at that point I mentioned that the market would be trading lower, going after this line here, which is called the return line. So we approached that line last Friday, traded sideways yesterday, and we are trading higher today. And I expect some sideways action for a while, and then we might be trading lower. However, it's important to establish some sort of sideways action to make the evaluation a little bit easier. At that point, it's hard to tell if we are going to trade higher again until that line, or if we are going to move sideways for a while. So all the targets had been reached on the Canadian dollar, US dollar, and now it's a moment to wait and see and follow what the market will do. The way it's most effective and most profitable, it's to be reactive to the market actions, not to be proactive. We learn that we need to be proactive to be good professionals. It's not really like this on trading. We need to really react to the market action. And if you are a day trader, you need to react to very minute actions and really quickly, or you won't be a good day trader. You can be a little bit slower if you want swing trades, and you can be even slower if you prefer to position trades. So it depends on the type of trading that you like to do. You need to have some skills, and it's really losing proposition to try to be, for example, a day trader if you don't have the quick action, the quick reaction required by this type of trading. Also, it's useless to try to be a day trader if you don't have the proper amount of capital to be able to pay for the commission costs. So in the case of Forex, it's the spread. So you are always paying someone to be able to trade. So you need to have the proper capital and the proper strategies to be able to be successful. And we talk about that on our planning courses. Well, I would like to thank you very much for watching this presentation, and I would like to invite you to stop by again tomorrow, and also to visit our website and take a look on the training courses we offer. We offer a complete series of training courses for trading and investing, focusing on technical analysis and business planning and risk management. The main areas that you need to focus on your trading. Very, very soon we'll be adding training on trader or investor psychology. It will be We talk about that on business planning, and we will be going deeper in that subject, and the plan is to bring that course in the second half of 2011. So keep watching and keep in touch with us through Twitter or by visiting our site. We have a very nice community forum that you can post questions, and I will or answer, or someone else in the community is going to answer. Thank you very much. Have a good day.